Hey, what's up you guys? Welcome to the channel. I'm Chris. As usual, I'm super happy to see you here. In case it's the first time for you to be on the channel, let me quickly introduce what we're doing. We're actually a channel focusing on the stock market, on stock market investments, and on the general macroeconomic environment. So if you enjoy those topics, subscribe to the channel and you won't miss out on any more news from my side. With that said, let's jump right into the video. For today's video, I'd like to talk about Rivian. They've just reported their Q3 of 2022, so I thought it's a fantastic time to keep you guys updated on what's happening with the company, what are the news, what are the updates, and so on. That we saw actually the stock was really dropping in yesterday's trading, but that wasn't due to the quarterly report. It was actually due to Lucid Motors cutting their forecast, and of course the whole kind of sector suffered with that. So if you guys are actually interested in me reviewing Lucid or other car companies as well, then just leave a comment on the bottom with what you'd like to see, and I'll try to also review that in the coming future. Jumping into Rivian's Q3 of 2022, we'll have a first quick overview on the key points, and then we'll dig a little bit deeper into the numbers and we see what we can learn from that. Their pre-orders for the cars actually increased to 114,000 cars, which is really good. It's much higher than it was in the previous quarter. I think the previous quarter, if I remember correctly, was somewhere around 93 or 94,000 cars. So they've added roughly 20,000 cars on their pre-orders, which is generally good. But you see that the problem is those are just pre-orders. They aren't actually produced. So there's still a lot of work to do on those cars. But in general, the demand is there for the cars, and that's something that we want to see as investors. They also have produced over 15,000 cars since the beginning of production until 30th of September of 2022. So that's definitely good. But they do forecast that they will produce 25,000 cars in 2022. So that is 10,000 cars more than what they've produced in the first 3 quarters. And for me personally, that does look a little bit unachievable. I don't know exactly how far they're going to get, but that will be an increase of, roughly 50% more cars in the next quarter than what they did this quarter. So it seems like a steep increase. They say that yes, they can ramp up production now, but still by 50% still seems a little bit high to me. And they still do have a ton of cash on their balance sheet, so that is definitely good. It takes out that risk of liquidation or bankruptcy and so on. So it's definitely something I'd like to see. Most of that cash is still coming from their IPO last year. So I think last year they raised roughly around 13 billion US dollars when they went public in their IPO. So a lot of the money is of course still there. In the meantime, they've also taken out more shares. So they've issued more shares. So they did dilute shareholders slightly, but in general, it's still kind of under control. So jumping a bit deeper into the numbers, we can see that in the third quarter, they've actually produced 7,500 cars. With those 7,500 cars that they sold, they made roughly around 536 million US dollars in revenue, which is lower than expected. Talking about profitability is still far out for Rivian. They're still extremely unprofitable, which is okay. They're a young company, but still have a look at this. They're burning through roughly 1.7 billion US dollars every single quarter. They have come up with cost saving plans. They want to invest less in capex, which is fine. They have to do it, but they're still burning through a lot of money. And they expect for the full year of 2022 to actually burn through 5.5 billion US dollars. A staggering number. I know they have a lot of money on their balance sheet, right? They have 12-13 billion on the balance sheet, but still they're burning through 5 billion a year. So they can sustain that for roughly, 2.5 years, and then that's it. So they need to find a way to get profitable, to save costs, to increase production, increase revenue. Those are really important steps that Rivian needs to take. And for those of you who are often on the channel, I love to talk about free cash flow. So also here, free cash flow of course has been negative. So they lost roughly around 1.6 billion US dollars in negative free cash flow. So again, also here, just burning through cash. Alright, so that was a quick overview over the business. We understand the fundamentals, we understand the concept of the business. Now let's jump into the balance sheet, income statement, and cash flow statement. We're starting out with the balance sheet. So we can see last year, December 31st, they actually had $18 billion in cash, and now they only have left $13 billion. So they actually actively burned through $5 billion in cash. From the liability side, they're totally fine. They have a little bit of debt. What is that? 1.2 billion in debt, which is totally fine. They didn't really add any debt or anything. They did add a little bit of accrued liabilities, which is really not a big deal. We're talking $1 billion, right? And 1 billion in debt. So I like to see that at least the company doesn't have debt, especially now with the increasing rates for the debt. That can get very expensive for a lot of companies. So Rivian is totally fine with that. Now jumping over into the income statement, we see of course we had that crazy start actually of revenue because last year they weren't actually on the market yet. They didn't sell any cars. So we've got that huge increase, which is obviously very nice to see. But we also see that gross profit, of course, came crashing down. So they're starting to lose a lot of money on the gross profit level already. And that kind of pulls through all the way into, their loss from operation. And again, also here, it pulls through all the way into their net loss. So we're talking 1.7 billion US dollars of net loss for the quarter versus last year, the same quarter of 1.2 billion. Again, it is an increase in net loss, but it's lower than what was expected. So that's why actually the stock in post-market is jumping up a little bit. So to recap, I do think Rivian is a good company, but I'm not bullish on it. If you've watched my previous videos, you'll know I'm very skeptical with the company. For me personally, I prefer to, invest in companies such as Polestar as example, or, as example, NIO in China, Tesla, of course, are good companies because they already have a proven kind of concept of their business, right? They are already operating, some of them are already profitable. So I think those investments are more safe than Rivian. So in general, at the moment, I wouldn't invest any money into Rivian. Again, I'm not a financial advisor. It's just my personal opinion. I wouldn't, touch it at the moment. If the price comes down even more, I might look into it. But at the moment, for what they're performing, I think they're extremely overvalued. So it's a really, really risky play. Of course, it depends on your, risk management. If you think it's a good investment or you can wait for a long term to see if this plays out, it's definitely fine. But from my point of view, I wouldn't take that risk at the moment. So that's it for me for today. Thank you very much for tuning in and see you next time.